Hello, good morning. Happy Friday to you, and thanks so much for tuning in to Stocks to Watch. We've got an interesting set of stocks to talk to you about today. So, without further ado, let me introduce my guest, Siddhartha Khemka. Thank you so much for joining me this morning. There are a couple of developments that have come in to
Yeah,
get
good
your view
morning,
on
Alex,
that.
and good
But
morning to everyone.
before we do that, I think let's well, I don't seem to have Siddharth yet, but there's Mindtree and the results that came in yesterday. There's also HCL Tech, which in fact might come out with its results anytime now. Siddharth, like I was saying, very quickly, let's talk about the Mindtree results. Thanks so much for joining me. In case you didn't hear me, good morning. Uh, let's very quickly take your view. Mindtree results, dollar revenue came in 3% higher. Revenue came in about 1% higher. Net profit came in quite so broadly. What's the view here, Siddharth?
Hello. Yeah, good morning, Alex, and good morning to everyone. Mindtree, the results were more or less in line with expectation. The top line growth, the 3% Q on Q revenue growth was almost in line. The good part was, like all the IT companies, there has been a margin expansion of 160 basis points, which is quite positive. And overall net profit has also been marginally higher than our expectation. So basically, deal wins is something that left a little bit on to be desired. It was reasonably stable, the at 303 million. And if you look at the previous two quarter, the run rate has been a little bit higher than this. The company has been doing very well after the takeover last year with a refreshed the strategy, revamp strategies to shift to annuity deals, operational efficiencies, and tail account rationalization, which is showing results in terms of margin expansion and increased deal wins, which are positive. However, if you look at the stock price, it has moved up almost 77-80% on a YTD basis, and is now trading at 21 times FY22 earnings. So we believe that yes, the company is doing good in terms of the growth and margins. However, if you compare the valuation with some of the other even tier one players, they are trading at much reasonable valuation, which are comfortable. So we had a buy rating, which the results and the run up in the stock. We are now downgrading it to a neutral. So basically, what we are saying is that it is not the right time for fresh investors to get into this stock. Existing
Right.
investors might consider continue holding it or shifting it to something like an Infosys or an HCL Tech.
Speaking of HCL Tech, Siddharth, in fact, the results might come out while we're speaking right now. I'll very quickly get a view from you on that. A lot of people are talking about HCL Tech is a better pick than Wipro. In fact, some people even keeping it higher than TCS and an Infosys or in the same breath. What's your view on the numbers, and what are the key aspects that you're going to be looking forward to in the earnings today?
Yeah, so if you look at some of the other IT players, they have been doing relatively much better. For coming to HCL Tech, we are expecting 5%, 5.5% sequential US dollar revenue growth. Margins again are likely to expand, and that should lead to a net profit growth of about 18% on a Y-on-Y basis and 6% on a Q-on-Q basis. What needs to be looked out for is the deal pipeline, the IMS, which is the largest segment. There, the performance is key monitorable. So if you look at HCL Tech, the biggest advantage is it has the highest exposure to the infrastructure management services, which is almost 37% of revenues, and it is the larger portion of the non-discretionary spend and offers a better resilience in the current context. Also, with more work from home or work from anywhere, the IMS requirement will only go up going forward. So we expect this business to do well. Besides, it also has HCL Tech has higher exposure to financial services, technology, and manufacturing, where we are expecting an uptick in the IT spend going forward. Deal pipelines remains healthy. Given this background, the management had revised its revenue growth guidance in between a quarter to upwards of 3.5% on a Q-on-Q basis for the quarter, compared to its earlier guidance of 1.5 to 2%. Now, coming to valuation compared to others, they are still trading at about 16.5, 17 times on FY22 basis, which we believe is comfortable given the strong growth, the strategy, deal wins, and margins. So that's our preferred pick after Infosys. So Infosys is our top preferred pick in the IT space, followed by HCL Tech. Hello, okay, I can't hear a thing.
Sorry about that.
Hello, hello.
Siddharth, so sorry about that. I got disconnected from the show right now because of an unstable internet connection. But thanks so much for that view on HCL Tech. I do want to get your view also on the NBFC space, and that was one of the sectors that corrected very sharply in trade yesterday, and particularly Bajaj Finance, I noticed, was down about 5%. Would you say that this is a good opportunity then to buy into declines, and which stocks would you prefer from this space?
Yeah, Alex. So if you look at the entire NBFC space, the second quarter has been a quarter of normalization in terms of collection, in terms of disbursement. While the complete normalization is still some time away, the initial signs are encouraging. But if you look at other segments within the NBFCs, not all segments have recovered fully. So if you see the housing finance companies there, the collection efficiency has gone up above 80%, while in the vehicle finance space, it is still much lower. Microfinance has seen some improvement to about 70-75%. So if you look at the entire space, in the past 6 months, while the steady improvement across parameters have been encouraging, we believe that the balance sheet strength and liquidity is something that keeps certain players on a better position, and hence more companies which are more focused towards the retail side compared to corporate is something that we are preferring or liking. Given that we believe that a company like an HDFC Limited, which is a market leader in the housing finance space, the strong balance sheet, the low cost of funds, will continue to do well. But if someone wants to look at a higher growth, but is willing to take some kind of risk and a longer duration, can look at a Bajaj Finance. But the ideal situation would be to add gradually on dips, because Bajaj Finance is a high beta stock, is a comparatively a higher valuation stock, and hence can be beaten down in market fall like yesterday. And those are the days when one should look to add on to such kind of stocks, right, and have a longer duration horizon, investment horizon.
Right. So that, I'm going to take your view at some point on the latest development, which came in yesterday with regard to the import of air conditioners with refrigerants. And we're trying to understand, of course, the extent of that impact. If you have a very quick view on that and say, which are the companies that are likely to benefit, that would be nice.
Yeah, so if you look at the government has banned import of air conditioners, both split and window with refrigerant. The total imports under the banned HS code in FY20 stood at about 3,600 crores. So that is the kind of impact that can happen. Now, so what can companies do? One, you buy the refrigerant from India. So there are few manufacturers like SRF and Navin Fluorine which can benefit to some extent. And second is you have to get them manufactured in India. So some of the OEM manufacturers or some of the domestic manufacturers, say like a Voltas or an Amber Enterprises, might stand a chance to benefit out of that. So that's the initial thoughts. We need to really get more details and clarity to give us a detailed comment. But nonetheless, we have been positive on the AC segment in India, and Voltas is our preferred pick in that space.
All right. Thanks so much, Siddharth, for joining me. Apologies for the problems in my connection, and have a lovely weekend ahead.
Most welcome. Thank you, and have a nice weekend.
You, dear viewers, thank you so much for tuning in. Apologies to you as well. It's been a bit of a troubling session for me, but hopefully the day ahead is going to be a good one for you and the weekend ahead, of course. Thanks so much for tuning in. This is BloombergQuint.